Hello, today we're going to talk about US Treasury yields, and we're seeing that the US Treasury yields climbed on Monday as investors braced themselves for comments from Federal Reserve officials and economic reports expected throughout the week. And the yield on the 10-year Treasury was up by more than 4 basis points at 429, trading near levels last seen in 2022. The 2-year Treasury yield was trading over 2 basis points higher at 497. Yields and prices move, of course, in opposite directions, and the prices for the bonds, of course, they are suffering from the rising yield environment that we're in currently. And investors await a series of comments from Fed policymakers, including Chairman Jerome Powell of and during the central bank's annual Jackson Hole Symposium, which begins Thursday. Many are hoping for fresh clues about the outlook for interest rates. That comes after minutes from the Fed's latest meeting, released last week, suggested further rate hikes could be announced depending on the state of the economy and whether inflationary pressures continue. Since the Fed's last meeting in July, officials have expressed mixed views about whether further interest rate hikes are needed. Many investors had dropped and expected that the Fed's latest interest rate hike at its July meeting marked the end of its rate hiking campaign. The central bank has hiked interest rate 11 times since early 2022 in an effort to cool the economy and ease inflation. On the data front, investors will closely follow the latest existing and new home sales reports and durable goods orders figures, which are slated for this week. No key data is due today. Elsewhere, China's central bank cut its 1-year loan prime rate by less than expected on Monday, while leaving its 5-year rate unchanged. That comes after the People's Bank of China announced surprise interest rate cuts last week as weak economic data raised concerns about the state of the economy. Overall, the markets are doing better today, but we shall see how long it will take until we see the bearishness coming back to the markets and hunting investors, because it is not really clear whether the interest rates will stay at the levels where we are right now. And we will have recovery rallies every now and then, but the general trend, of course, is that with higher interest rates, we will see further pressure on the markets. If you would like to receive further updates on what's going on in the market space, please like and subscribe. Thank you.